Let me ask you a question. Have you ever been in a situation where you've marked up the charts, you got your little support and resistance areas, you found your double top, and you're just absolutely vibing. You got your trade set up, you're in a trade, you're in profit, and it's 30 pips in profit right now, and you're listening to music, and you're just absolutely vibing. And as the trade approaches your take profit, it just completely goes all the way against your trade.
I'm pressing! I'm pressing 5 and it's not working!
And if it doesn't stop you out, if it does even worse, it might even blow your account. So if you ever experience a situation like this, then this video is specifically meant for you. So let's go ahead and talk about this. And what you'll realize is I'm currently on the 15-second chart, meaning each of these little Japanese candlesticks is 15 seconds worth of time. And essentially the culprit of a move as sharp and as drastic as this is generally high impact news with fundamentals. It is crucial whenever you're marking up your charts, whenever you're doing your technical analysis, you must keep an eye on what is happening with the fundamentals, what's happening in the economies that we're actually trading with, so we can prevent situations such as these. And you'll notice, since this is a 15-second chart, the price moved from here all the way to up here within 15 seconds. And all within just 1 minute of time, the price jumped up from here to here. It moved 178 pips completely against you within just 1 minute. So to save yourself some time, energy, and money, in this video, I'm going to explain how we can optimize our trades, how we can manage our trades in situations such as these. So let's go ahead and dissect what's actually happening here. So we are currently looking at the currency pair GBP NZD. So we're looking at the pound versus the New Zealand dollar. So one of these two countries must have had high impact news that affected this currency. So how do we figure out which news affected this currency pair? We could look at news for the pound and we can look at news for the New Zealand dollar. And for the sake of time, I'll just tell you what caused this massive move right here was the news of New Zealand dollar. Whenever you're looking at a currency pair and the currency that's on the right hand side, which is the quote currency, as opposed to the base currency, if the news on the quote currency is bearish news or bad news, that this pair itself will go up. This shows a sign of weakness for the New Zealand dollar. So what caused the New Zealand dollar to rush up this massive move at this exact time? So how we figure this out is we would just look at the time that this actually happened. This was 2100 in my time zone, and then you just pull up an economic calendar and see on this date at this exact time what actually ended up happening. And we can kind of see all the different currencies here. We can isolate the only news here that actually happened at 2100 was the New Zealand dollar, and this was the interest rate decision for the New Zealand dollar. Now, without getting too off topic and going into minute details of what exactly happened here, just as an overall summary, the Reserve Bank of New Zealand essentially said this is potentially the highest area, the highest point that the interest rate is going to be, which caused a massive sell-off in the New Zealand dollar, an NZD, which in turn made this currency extremely weak based off of that news. So the main topic at hand is how do we manage our trade in situations such as these? Because when we have our trade open, let's say in this scenario, we had our trade open for 22 minutes. We just had our trade open. We were just literally just chilling in our trade, listening to music, almost hit our take profit. And then without any influence of our own, this just randomly ended up happening and completely ruining this trade, causing this potential winner to be a loss. And if you're someone who doesn't have proper risk management, this could have completely, absolutely obliterated your account and completely blew your account. So how do we manage this? In this video, I'm just going to go over the main key tips that I know that can help you in order to mitigate these losses and to manage your trades the best way, because things like this will inevitably occur in the market. We just have to know as professional traders how to handle situations such as these whenever they do arise. Now, the first rule I have for myself is whenever an economic calendar, high impact news or medium impact news event is coming out, on the economic calendar, I personally do not enter any trades roughly before that time period. So each week, it is very important, pretty much right before the week starts, it's super, super, super important that you always look at an economic calendar and just kind of quickly skim through the currency pairs that you trade and see if there's any high impact news or medium impact news that's going to be coming out in that week on those certain days that could potentially interfere with your trades. Because at the end of the day, these numbers, the number that gets released at these exact times, at this exact second, these numbers are something that we cannot control. So it can always be worse than expected. The number that comes out can be better than expected, or the number that comes out can be as expected. So many different probabilities and variables that can go on with whenever the news comes out. So the best thing to do is, if you are looking to enter a trade and maybe that trade is going to activate maybe an hour before the economic news comes out, it might be a wise chance to kind of stay out of that trade for that time being until after that news comes out. And I know for some people, maybe the gamblers watching this video, a swing like this is very appealing, very appetizing to you. So you might, in fact, based off of this video, you might think to yourself, ooh, maybe I do want to trade these. I'm willing to risk the gamble. I'm going to tell you it's a very bad idea and you probably should not trade the news. Yes, looking at this, it is a very appealing trade to have 200 pips happen within just 5 minutes or so. But at the end of the day, you might be right 50% of the time, you might be wrong 50% of the time, and it's just not a good situation to put yourself in. And it's just not a good situation to build your lifelong career based off of like a coin flip. Like if you have a $100,000 account, would you be doing this? Probably not. If you have $1 million account, would you be doing this? Probably not. But I know for smaller accounts, it is appealing because if you risk 100 or a couple $100 on a trade, you can flip that to 10,000, 5,000. And that's just building bad habits. You're never going to get consistently successful and profitable by doing things like this. Now, before I explain exactly what I do to manage my risk in situations such as these, I need you to listen to this very important pro tip that I'm about to tell you. I'm going to repeat it because I need it to be drilled into your head. It is far more important to preserve your capital rather than trying to grow your capital. I'll say it again in a different way. It is imperative that you put far more importance on avoiding losses rather than growing your account. Or in other words, your number one priority should be capital preservation, and then your number two priority should be account growth. And once you are in agreement with me, we can then move on to the explanation. So there are exactly 4 options that can happen in situations such as these. So let's say you're in a trade, and let's say you enter the trade not based on the economic calendar. Let's say you enter the trade just on technicals, like you're normally trading, but let's say the price came to a point where your entry was a solid entry and you wanted to enter that trade. And let's say you were also aware of the economic calendar, which, by the way, you should be aware of the economic calendar. You should be aware of what events that are going to be coming out. And let's say you did realize that coming up is going to be some fundamental news or an event or a high impact or a medium impact event coming out on the economic calendar. And in this case, right before 2100, you know that the event is coming up, what you can do to prepare yourself for the inevitable event that's going to happen in the next 2, 3, 4 minutes. First scenario is if you had recently entered a trade and you are, let's say, in profit less than 50 pips or less than 30 pips, somewhere in that range. If you're not in profit too much, at that point, this is what I would do. I would, while the trade is in profit, and to brace myself for that news event, I would move my stop loss to break even. Because if the price does whip against me, I want to attempt to be out of that trade as close as I can to a loss if it goes against me. And by the way, guys, because of slippage, because this stuff happens so quickly, you might even lose a bit of money in situations such as these, but hopefully you'll try to get a loss that's right at zero. Because at this point, you'll notice we're in profit. Not quite at the 30 pip profit, but we're in probably around 25 pips profit. But in the scenario that the price does go against you, you want to try to be out of that trade without losing any money. So that's the first scenario. So if you are in less than 30 to 50 pips profit, just move the stop loss to break even and just hope for the best. And if the price does end up going against you, hopefully this would have avoided you any losses and you can trade yet another day. Now for the second scenario, let's go ahead and move on to the 1 hour chart. And in this scenario, let's say you are in a trade as well, and let's say your trade is currently in profit. Let's say you had maybe a 250 pip take profit, or maybe even like a 200 pip take profit. But let's say you're in a trade, you're in profit, and let's say that current profit is more than 50 pips, meaning you're decently in profit. In this scenario, here's what you could do. What I would do is, in this scenario, if you're in quite a bit of profit and before the news release comes out, this is the point where I would for sure take partial profits. I would close a part of my trade. I would close half of my trade at least, and then leave the other half continuing to run in case the price does go in my favor. If the price does go in my favor, I still want to have my regular TP, my regular take profit. But in the scenario, in the off chance that the price does go against me, I would for sure want to at least secure some profits because the trade has gone far enough into profit, and I don't want to lose all of that time and effort wasted. So I would do partial profit, take half of the trade off the table, let the rest continue to run, and the next step, same thing as we did with the previous example, I would ensure I move my stop loss to break even. I would move my SL to BE. Once we have the SL to break even, and we have half of our trade taken off the table, prior to the event, I would go ahead and leave the other half of the trade to continue to run. And if the price does go up against me, it's fine because I at least made some profits and hopefully I avoided any further losses. Remember, the main priority with both of these scenarios, what we've done, the main priority was to make sure we are avoiding any further losses. So we're moving the stop loss to break even before the event comes out. And then the second priority, we want to grow our account, which is taking partial profits before the event comes out, before resuming the trade to the final take profit. So let's talk about the third scenario. Let's go ahead and go back to the 15-second time frame. I'll go ahead and erase these arrows here to clean this up a little bit, and I'll erase this. Third scenario is if you are in a trade, and let's say you're currently running in a loss, and let me go ahead and just illustrate a sell position that you were in. Maybe you entered the sell over here. And let's say you had a, normal, decent, let's say 30 pip stop loss, and you had like a 50 pip take profit. And let's say you actually entered over here or so. So let's say you entered here. And let's say that trade is still running. But prior to the news coming out, let's say you are currently in the red, meaning the price has not hit your stop loss yet because the news hasn't came out yet. But let's say you're currently in a loss. How do you manage a trade when you're in a loss and before a news comes out? Because if you were in a loss, that could completely wipe out your account. But if the news goes in your favor, then this loss can quickly turn into a profit. So how do you manage a trade when you are currently in a loss? So the third scenario is if you are currently in a loss and it's within your standard stop loss parameters, in this case, a normal small 30 pip stop loss in this situation, if you're managing your risk the right way, what you can do is you can make sure you adjust and move your stop loss if needed to an area where you are okay with that amount of loss. So for example, right before this news came out, let's say at this point, we are currently 6 pips in a loss. If you are okay with a 15 pip loss, and you would calculate that based on the lot size, or if you are okay with a 30 pip loss, you would move your stop loss to something that you are okay with losing. You do not want to remove your stop loss. So the first thing you do is you adjust your stop loss to a point where you are okay with the loss if you do lose. And if the price ends up going in your favor, you're not going to incur the loss anyways. So how do we manage our trade in this situation? So once the news comes out, once the number gets released, let me just kind of rewind this a little bit. Once the number gets released, 2 things can happen. Either the price might whip completely against you, and then you would incur the loss that you would have already accepted. Or here's how we would manage the trade if the price does end up going in your favor. If the price whips in your favor, once it does, and let's say you are now in profit, once the price continues in profit, what you would need to do is you would need to move your stop loss quickly. You would need to act fast, move your stop loss to break even. In the scenario, the price does end up whipping right back, creating a wick and going back against you. So you would wait for the price to go in profit. Once it does, put your stop loss to break even. Because in situations such as these, the price can often and does often go in one direction, and then it does end up wicking and whipping all the way the opposite way, and ends up wicking everybody out of their trades. And one thing I do want to stress, what I mentioned earlier, is if you are in a trade and you do have your stop loss set to like 30 pips or so, it is very, very important that you absolutely do not remove that stop loss, because in a situation, in this case, if the price does end up going against you, who knows? If you don't have your stop loss made and you were in that losing trade, who knows how long and how far up the price will go. It could continue to go up even further, even further, even further. The people who remove the stop loss in situations such as these, they're hoping that the price will eventually come back down and end up hitting at least back to break even. But who knows? This could last for literal months. And every day that you're in a loss, you're losing a bit of money. And in this scenario, the price ends up going even farther like it is now, you will completely blow your account. So if you have a $10,000 account, if you have a $15,000 account, if you have a $100,000 account, and you let some stupid mistake such as removing your stop loss affect you, you would have blown just a $100,000 account just by not having the discipline to stick with your proper risk rules. All right, now let's talk about the fourth scenario. Let me go ahead and remove everything from this chart here. Let me go back to where we were. So let's say you are in a situation where, let's go back to the hour chart. Let's say you are in a situation where you are in a losing trade, because this could very well be a legit scenario that a lot of people are possibly in. If you are in a trade, let's say you were looking for a sell right here. You're looking for a sell and the price just ended up not going in your favor. And let's say you are the type of individual who didn't have your stop loss set. Let's say you're someone who did have a stop loss set, and then you just kept moving it higher and higher and higher just because you didn't want this trade to get stopped out. So now at this point, as we can see, you are currently around 110 pips currently in a loss, and this economic calendar news event is about to be released. How do you manage a trade like this? Because as you can see, it wouldn't be a good day. The way to manage a trade like this is just follow these steps. Because I don't know how to help you there. You should never get yourself in a situation like this where you are moving your stop loss, because that is a very, very dangerous game to play. I want to keep this lighthearted, but I know this is a thing that a lot of traders experience, and they keep blowing account after account after account. Let this video be a warning to you that you should not ever let yourself get in a situation such as this, because more likely than not, you're going to blow your account, or you're going to end up with a massive loss that's going to be very hard to dig yourself out of. And then you will be in a situation where you're doing a lot of revenge trading. You are mad at the market and you don't want to accept that massive loss that you had, even if you were able to save your account somehow and you didn't blow the account. And you're going to keep entering trades that are not too clean just to try to get back to break even, just try to make all that money back. And that's just going to put you in a downward spiral that's not going to have a happy ending. So do not let yourself get in a situation where you experience scenario number 4. So if this video was helpful for you, it would really help me out if you dropped a like on this video, share this video with someone who does trade like this, who does trade the news, who does like to gamble, or maybe doesn't have the proper risk management, because it is imperative that you guys are trading the right way with a proper system that is repeatable, that you can trade over and over and over again and get consistent results. So now hopefully by the end of this video, you have a complete understanding on how you can manage your trades whenever it comes to situations such as these, whenever high impact news, medium impact news, or speech impacts, or even Fed decisions, rate decisions, whenever all these things happen in the market, how you can manage your trades whenever you are put in any of these 4 situations that I've described previously. Because remember guys, it is imperative that your number 1 priority is to avoid massive losses. That should be the number one priority. Second priority should be growing your account. And once you understand that, only then will you be trading in the zone. That being said, for those of you who do want additional help, maybe want some mentorship, maybe want some accountability, maybe you need someone to look at your charts, we do have our private program as well. The link to that is in the description, where we have our private program where I show you exactly how I enter trades, what we do with the strategy, and we hold you accountable to make sure you're following the steps the right way to make sure you can get consistent results. That being said, I'll catch you guys in the next video. Take care, guys.